Good afternoon, Paul.
Hello, welcome back. We're very delighted to have our friend Al Kutchins from the highly respected CPA consulting firm of Kutchins, Robbins, and Diamond in Schaumburg, Illinois. Al is paired up frequently with me on various different subjects. We're heading into the new year. We're into 2023, and I'm sensing very clearly that Al has some comments to make. Welcome, Al. Take it away.
Thanks, Paul. Happy New Year to you and to all of our listeners. We're going to take a break from our last four topics of planning to sell your business to talk about some of the tax law changes that impact 23 and beyond. There wasn't any real major law changes to businesses this year, but some of the things that were passed in prior years take effect in 23 and beyond. So we'll hit on those. And of course, if our viewers have any questions, they can contact us for further information because the time doesn't allow to go into great depth. So a tasting. So the first one that I want to talk about is the pass-through entity tax. As we all know, on our personal returns, the last 4 or so years, we've been limited to a $10,000 state tax deduction, which included our real estate taxes and our income taxes. And for most of us, our home real estate taxes exceed the $10,000 in themselves. So we've all gotten the short end of the stick on that one.
Yep.
So if you have a pass-through entity, which is a partnership, an LLC, or an S corporation, you can elect to have your corporation pay the estimated income tax, and that'll reduce your corporate income, which flows through to you. And on your K1, it'll show up as a credit. So if you own 100% of the S Corp and it pays in $20,000 into pass-through tax, then you're going to get a $20,000 credit on your Illinois tax. So it does two things. One, it reduces your income because the corporation gets a deduction for the taxes. And second, it helps avoid having you to make some estimated tax payments because it flows through to your tax return. So that's something that's really more to consider in 23 because most likely you're not going to do it for 22 anymore. So that's one item, thinking ahead. One item that we have all enjoyed, particularly our manufacturing clients, is bonus depreciation, where you can put an asset in service and write off 100% of it. Well, all good things come to an end. 22 was the last year that you can deduct 100% of the asset, and it's in a phase out over the next 5 years. So 23, you can only deduct 80%, 24, 60, 25, 40, 26, 20, and nothing in 27. So that was always one of our favorite tax planning strategies because you can put the equipment in service just before the end of the year, get to deduct the whole thing and wipe out a whole bunch of tax.
Yes.
So that's going to be phased out. The other depreciation item that we took advantage of is called the 179 expensing election. That's still available, but if you acquire over $2,890,000 of assets, that will start to phase out on the deductibility. Also, one negative about 179 is that it can't create a loss. So you're sometimes limited to that. Whereas with bonus depreciation, you were able to create a loss. In Illinois, which I think most of our listeners to the state doesn't recognize the 179, and you have to use straight lines. So while you can get a larger deduction for federal, Illinois scales back that advantage. So now that we're post-COVID, we had the opportunity in 21 and 22 to enjoy a deduction for 100% of our business meals. Now that we're actually able to go out, they're going back to 50%. So it was pretty much an advantage without an advantage, because most of my peers, particularly us that are getting up in a few years, were pretty cautious about dining out for fears of COVID.
Yes, for sure.
So, and as always with business meals, you need to document the amount you spent, the date, the place, the business purpose, and the business relationship. So most of us use some form of electronic calendar, so you're already putting most of the information in your Outlook, because it has the date, the time of your meeting, where you're meeting the person. So you're really just need to add a little bit of note on how much you spent and the business topic. So I would suggest that you consider using Outlook or some other electronic device, and then at the end of the month consider printing out your monthly calendar, just or saving it someplace. So so now that we've eaten and we've bought our equipment, another area that is been a favorable area, and again, their government is taking away part of it, is the law calls research and experimentation expenditures. Those of us usually refer to it as R&D expenditures.
Yes, that's right. Yeah.
And this was really any expenditure that where the outcome wasn't known for the improvement of a process or the development of a new process or product. And we used to be able to take all of the expense and have the credit. Starting in 2022, we're going to have to capitalize those expenses. We're still getting the credit, but they're going to either be amortized over 5 years or 15 years for international costs. And no matter when you incur it during the year, we're going to have to use the midpoint convention.
Mhm.
And there's been talk about deferring the implementation or revoking it, but as we see our congressional leaders not able to agree on most things, we think it's unlikely to be deferred or eliminated. Additionally, it's a very large revenue raiser because before you were able to expense it immediately, now it's going to be spread over a number of years.
Oh, okay. Okay. Okay.
And I think if you haven't taken research and development expenditures before, you're probably cheating yourself
Right.
because there's hardly any business, particularly a manufacturing company, that doesn't have expenses that fall into that category. And while we don't do the R&D engineering analysis ourselves, we work with Tri-Merit or McCoy Sponsor, and these companies have engineers on staff that really can dig in and understand your manufacturing process and help you identify where you incurred costs. So I do think this is an area that virtually all of our listeners qualify. Some of the, areas, manufacturing, engineering and architecture, breweries and wineries, anybody doing fabrication, food and beverage, software development, which is all
Yes,
unknown,
for sure.
technology and tool and die casting. So you can see it's a very wide range of industries that qualify. The four-part test it's technological in nature. It relies on principles of the physical, biologic, computer, or engineering sciences. That there is an uncertainty of its success. It's there to improve functionality, performance, reliability, and quality. And the fourth test is it's a process of experimentation. You might be developing one or more hypotheses. The design is experimental and such. So we probably do that type of work every time we have a new project.
Yeah,
And
that's right. In your opinion, today, after several years of having this R&D deduction and so forth available to us, how many business owners would you just hazard a very broad guess are not aware or taking advantage of this now? 1 out of 2, 1 out of 3?
yeah, I'd say if 50% is
Yeah,
a pretty good guess. In the most common excuse that I hear is, well, we're really not doing much of it. It's not worth
right.
our effort. But unless even if you're like a job shop,
Yes.
you're experimenting and setting up your production processes, your jigs and things like
Yeah.
that. So, I have a client that specializes in manufacturing large parts, and it's most of the time it's a very limited production run. So he's developing jigs and processes virtually for every product that he manufactures.
There's a,
And so,
go ahead.
no, go.
There's a hazard, in my opinion, being a former manufacturing plant owner, of the concept of the owner or decision maker believing what they know or heard of or have defined their own business to be is not consistent or contemporary with what's going on in the definition of the tax law. So that's a case, and you'll find many listeners, you'll find many definitions of tax law approval if you take the time to read it, or dial L's firm and get a definition, because your concept or your belief as to eligibility may, in these times, be miles away from accuracy. So it's good to check and have a competent contemporary accountant, tax expert around you, especially in these days, I would believe.
And the other thing, Paul, that we've seen with the clients that we represent is so often they're working in the business rather than on the business, and they can't
right.
back away to see, what could be missed.
Yeah, more and more all the time. The hats decades ago of an owner were substantial. They're multiplied by many more because of demands from extenuating areas that are not germane to the day-to-day operation, like sales or production. There are regulations and there are obligations that we're getting everywhere from labor to environment and everything in between. So another case for learn, reach out and find out what's new that applies to you as the owner for your benefit.
So the last area that I'd like to talk on is today is in the next 11, 12 days, all the businesses are required to file their 1099s and W-2s. And on almost all the returns now, there's two questions. Were you liable for filing 1099s? And the second one is, if you were, did you file them?
Yes.
And we're all signing the tax returns under penalties of perjury.
Right.
And this is an area where the IRS has really been cracking down. And I haven't seen anybody really charged with criminal penalties, but I have seen the loss of the deductions because they haven't done the compliance reporting, because this is one way that the IRS is able to close the gap on unreported income. And they're doing almost 100% matching on all the electronic filings.
Yeah.
And, it might be a year or two later, you'll get a notice that says, you seem to have missed this item in your tax return. And I have found that overall, these notices are pretty damn accurate. So,
happy Valentine's Day from your IRS.
Sometimes it's little like our wives will open a small savings account for their mad money and won't tell us about it.
Right.
And there'll be a 1099 interest that we don't pick up. Really to protect your deductions and to be compliant, you need to do the 1099s. For most of us, it's going to be for outside services of $600 or more. Another area is for all of us that have S corporations, for any 2% or more shareholder, you're supposed to include the insurance premiums on your W-2.
I see, okay.
And if you don't include them, then you're not entitled to claim the deduction for medical expenses. And the same issue with personal use of the company auto needs to be added in.
Yeah, with the price of fuel the way it is, has there been any change in the allowable rate per mile or any computation changes in that area?
Oh, that is an excellent question, and um I'm not seeing it on my quick and dirty cheat sheet, but I do believe it inched up a little bit. And that's an interesting area. Often clients would will want to depreciate the car, and they're almost all fall under the luxury car rules now because they're so expensive. Whereas the standard mileage, there's really not a cap, and the record keeping is pretty easy. And going back to our discussion of it a few minutes ago, your Outlook calendar has where you met. You can always go back to Google Maps and figure out,
That's
you
right.
know, the
It's worth it.
distances and such.
It's really, really worth it, Mr. Business Owner, Miss Business Owner. It's worth getting those systems in place so that you or someone that you designate in your company stays on top of it. To do it to 12 months in 1 week and try to meet the tax man's requirements as far as filing. No, do it monthly. Take these things that need consistent recurring reporting and do them monthly. So in our
So just
closing,
two more brief
right
things.
ahead.
I know I said the last one.
Okay.
If you do have a net operating loss, you're only allowed to use it against 80% of the income going forward on a federal level. In Illinois, it's limited to $100,000 a year. So that's been a another thing that they've taken away from us. And the most of our clients do have qualified retirement plans, but in Illinois now, if you do not have a qualified plan, you have to enroll in this Illinois Secure Choice so that everybody has the opportunity. So that's that. I just one commentary is as as we go through this, we see that they keep taking away and taking away stuff. So the other day when I saw some commentary about switching to a consumption tax rather
Really?
than an income tax. I don't think it's ever going to happen, but it's kind of, Europe has the value added tax.
Yes.
Canada has more a consumption tax. Now that we're getting a little older, we're consuming far less.
Yes.
So I'd rather personally have a consumption tax
That could
than
save
an
us some
income
money.
tax.
There's an advantage to be an old timer then. A couple of ending questions. They say recently regarding the inflation condition that it's moderating somewhat. Do you believe that? Is it going to go lower, or where is your prognostication with all your years of experience? Are we in the
So
soup?
I think it's coming down and will continue to come down in most of the areas. So things like that are easy to benchmark, like
Yes.
when we go to the grocery store, eggs are outrageous
Yes.
right now, but it's not so much from the inflation as there's a severe case of the bird flu, and they've had to kill millions of birds, so chickens. So till the supply chain is replenished there.
Yeah.
We saw Tesla lower prices on significantly on all their vehicles. We're having more uh, reboarding. Chip manufacturers are investing tons of money in the US, all the new EV battery plants. I think as more and more production picks up, and while these are creating jobs, Paul, we both know that they're highly robotic plants that they're building. So I think that the pricing will be more competitive, and the supply chain bottlenecks have eased quite a bit.
Good.
So yes, I do think we're going to see a continual decrease in inflation.
So that's the last question regarding that would have to do with unemployment and employment rates. Where are we? Do you recall, as far as it seems as though that we're doing pretty well as far as full employment is concerned, as opposed to unemployment numbers. Is the government planning any more giveaways that would enhance and entice people not to go out for work?
I don't think so.
Good.
I think the freebies were overdone, and I don't see any more. I know that every one of our clients, and ourselves included, are having challenges getting high quality
Yes.
employees. And even though the tech companies are announcing some fairly large layoffs, I think they're going to get absorbed into the market immediately because there's
Yeah.
such a shortage of tech workers.
With the offering of signing bonuses, many of these people feel like they're second baseman in the major leagues or
Mm-hmm.
a good quarterback. They're going to get
Yeah.
a signing bonus. When was the last time we recall that? It's been quite some time.
Yeah.
So
I
anyway,
know that our employees are pretty much able to work totally remote. Everything's been in the cloud. We now have employees in 7 states
really,
because we can't get local help. And we have a lot of uh, Eastern European employees that'll go home to their families for 2-3 months, and they're able to do all their work remotely. And so certainly a press operator can't take their punch press home with them,
no,
but most technical and clerical workers can work remotely. So it's very, very interesting, the dynamics and the changes we've seen in the last 3 years that COVID really has accelerated.
things have changed. How may our listeners talk with you personally? What is your contact information?
So you can contact me through my phone. The office is 847-278-4335, and that always forwards to my email. And my email is Kutchins, Kutchins, at KRDCPAS, like Kutchins, Robin, Diamond, Certified Public Accountants. And if all else fails, reach out to Paul and he'll forward your
Yes,
information to me.
absolutely. Absolutely. Paul at Heinze.com. Questions, contact information, more information, a special question, anything having to do with taxes, estates, and all of the operational accounting functions, I'll be happy to forward you over to Al. Al, always a pleasure talking with you. Looking forward to our next episode. In the meantime, be well. And all of you, thanks for listening. Be well, be aware, plan, but be happy. Peace. Bye for now.